Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Miles Cole, co-founder and CEO of Follow, to discuss the growth of financial influencers and their impact on Gen Z's money decisions. Miles, it's great to have you with us. Welcome to Trade Talks.
Of course, thank you for having me.
Why do you think the growth of financial influencers, or finfluencers as they're called, it has an impact on Gen Z's money decisions?
I think in 2021 we saw this massive rise of retail investing. Really, for the first time, retail investing became very socially and culturally relevant. And I think that there was all these people, especially Gen Z, that were hearing about retail investing, reading about retail investing, but didn't really know where to get started. And so I think a lot of them turned to these financial influencers as their primary source of keeping up with everything that was going on. And I think that interest on sort of the demand side of all these people wanting to get involved with retail investing is what really helped lead to the big rise on sort of the supply side of all of the investment creators.
How does Follow capitalize on this newer form of financial education?
Yeah, so I think we really allow talented retail investors to kind of invest beyond their own capital for the first time ever, where back in 2021, we saw that there was this big gap in public markets where talented retail investors, the only way for them to actually invest beyond their own capital was by becoming a hedge fund manager, which was this interesting juxtaposition to private markets, where if you're a really good angel investor and you want to take your skills to the next level, you could raise a fund, become a VC. And seeing that big gap is what got us excited to build a solution that allows these talented financial influencers to actually monetize their audience and engage with their audience like never before.
So let me push back a little bit here. As a Gen Xer myself, clearly didn't grow up with the online tools that Gen Z has, and I have to say Gen Z is certainly more savvy than I was at their age, just in terms of how articulate and inquisitive they are, not just with investing, but with everything overall. That said, though, when it comes to being an influencer, does it necessarily mean that you have financial background, or you've done the homework or educated yourself, or is this a trend that you picked up on because of what we saw during the pandemic? I mean, you have to weigh that out, that the right information is going to the target audience.
Yeah, absolutely. And I think that's a really good point. I think the key is finding the right financial creator that is also a really incredible investor. I think being a really great investor, being a good content creator, and a great entertainer are two different things. And I think what we saw in 2021, or at least the influencers that we try to attract to our platform, are the ones that have always been very talented retail investors and quantitatively are incredibly good. I mean, you could just look at the data and see it. Where in 2021, I think the big rise of all of this sort of consumer interest in retail investing, hopefully it allowed those people to become content creators and become more entertainers to reach a broader audience, rather than having it sort of be the other way, like you suggested, where a lot of these people that are maybe very good content creators and educators, but not necessarily great investors, are just kind of trying to capitalize on a trend.
So if I understand it correctly, with Follow, do you discover someone on TikTok or Twitter, and then you aggregate the best of them on Follow?
Yeah, I think what's most important for us, again, is first and foremost that they're very good investors. And
right.
We look at it quantitatively as well, where they link an external brokerage account, and we can actually see the data and see the performance of how they're doing to tell if they're actually good retail investors. And I think if they have a big audience of people that already trust them through financial content creation, that's an added benefit, but it's not the primary thing we look for.
So what was the genesis behind creating Follow? Where did it come from?
Yeah, I think, again, it was just noticing this big sort of gap in public markets, where we noticed that there were all of these people that were incredibly good retail investors. And it was actually sort of contrary to what a lot of the media was saying about these financial influencers at the time, during sort of all the GameStop Reddit craziness going on. A lot of people in the media were saying these Reddit kids, they don't really know what they're doing. They're very unsophisticated.
The media's been saying this about retail investors for years.
Of course.
And they are certainly more sophisticated, to your point.
Exactly, and we sort of had a contrary belief, and looking at the quantitative data, we saw that a lot of these influencers were just as good investors as the most sophisticated people on Wall Street, and we wanted to build a way for them to actually capitalize on that.
So portfolios of the future are portfolios of people. What do you mean by that?
I think what we mean is, in fintech, trust is very important. And a big trend that we've noticed is that the level of trust that Gen Zers especially have in these financial influencers is crazy. We saw it through the GameStop and Reddit short squeeze. We see it through the millions of followers that these people have on TikTok and YouTube and platforms like that. And so our whole thesis is that in order to capitalize on this trust and these audiences that these influencers have already established, we believe that moving forward there will be a lot more of this copy trading going on like we facilitate on the platform, where people want to further invest in these relationships that they have rather than just buying a stock ticker.
Do they leverage other educational sources besides influencers?
For the most part, yeah. I absolutely think so.
Yeah, because I looked at one of your stats here, nearly 80% of Gen Z seeks financial advice relative to 64% of my generation and 60% of baby boomers. To my point earlier, they were very inquisitive and seemed to be asking the right questions.
Absolutely. Absolutely. And that was another insight we had at the beginning, where I just asked a lot of my friends and people in my peer group where they got all their financial information, and the overwhelming majority said from financial influencers, which was this crazy insight, which I didn't expect. I think a lot of people didn't expect. But yeah, like I said, I think there's a lot of people that really want to get involved in retail investing, but don't really know where to start. And so an easy place to turn is to these financial publishers.
Right, and then also Gen Z, I mean, you guys are native technicians as it is. I mean, these things simply weren't available when I was growing up in the 80s and 90s, but not even just the finfluencers, but the other trading platforms and the fintech apps that are available to make it accessible. I think accessibility is a key part for this as well.
Absolutely, absolutely.
Yeah. All right, Miles, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.